Boom, baby, we're live. Welcome to the Tokyo Crypto Show, the greatest crypto show on the planet, and your multi-million-dollar cast is here. We're here. We're talking about what's going on. Listen, every asset is exploding in UPtober. If you don't know, October is the second most profitable month in cryptocurrency, and it's usually known as the setup for what's going to happen in November, which is the most profitable month. We have had nothing but a crazy good October, and there's more good news ahead. We're going to jump right into it, the whole panel. Guys, welcome aboard. Thank you for being here today.
Good to be here.
Yes.
Yeah. So, yeah, man. So, look, we got me. We're going to be talking about ETFs, general market stuff with me. We're going to be looking at some of the AI that I have, the KaitoAi, and talking about what crypto's talking about. Alex has some updates on the charts. The Federal Reserve had a meeting today. Steven is going to be giving us a commentary on that. And Elias has just got done with going to Token 2049 in Singapore. He's now in Thailand. He was just in Singapore at Token 2049. So we're going to give you guys all the information here. So be sure to hit that like button, subscribe, comment. And yeah, let's just jump right into it. So Alex, do you just want to take it away?
Absolutely. So following the madness from last week, where everything just fucking sent it on the first week of October, we've continued sort of up, and then nothing started happening, which is all good. We talked about this last week, so we've got this month up. From the monthly, it all looks really, really nice. If this indeed was a weekly cycle reset, which you can really make a good, strong case for that, there's still plenty to go. Like we said last week, getting up here requires like a $7.5 trillion total market cap, and we're about 4.3 at the moment. So that's quite a lot to run in, possible, but I'm far more looking towards this zone for our final top. Here's kind of the line on this Gann fan that's been sort of signaled every time we went above and then lost it. That was it for the weekly cycle. Went above, lost it, cool. Now we went above it, and we just sort of kissed it here, and that's it. So for this weekly cycle, if we're looking for Q4, for this month at least, 130,000. Once we get above that, then we don't want to see us below it again. So if we stay around here and we don't get to 130, great. We can sort of continue progressing. So the longer we spend without going above here, then, all right, let's draw it out like here. The longest we spend without going sort of above this line, then the higher we can go, the more sustainable things can get going. Because once we go above, then we're sort of in the breakaway. Time for us to find the top and zoom up. Now, it's time for us to find the top and zoom up for the weekly cycle. But in this case, because we're expecting this to be the final one, Q4 final top, it would also be the final top of the bull market. So from the monthly perspective, we're still chilling. We're up. It's very positive. New all-time highs. Well above halfway of the candle. Things are looking good. Start to zoom in. Here's our daily chart, and where it looks like a bloody mess. But the important thing is we're above this fan on the previous top. Beautiful. What we are looking here, all these little yellow circles, these are previous weekly cycles that I overlaid on top of the last one. And so if you were to say, oh, this is still part of the previous weekly cycle, then you can see that a previous one here, maybe I'll make it a bit brighter so you can see it, topped literally around this zone. But because we're pretty confident this is a new weekly cycle, you can probably disregard that. You can see there's a lot of sort of diversity in the timings when it comes to the end of a weekly cycle. So things are still looking good. By no means are we worried about anything. I did say last week, we did have over here, literally, the 6th, so it's still in this 3-day candle. We did have full moon, which, typically shit seems to happen on a full moon. We either have a top, we either have a bottom, we either start moving up or down. Just volatility seems to kick in. Who knows why, but that's just kind of what happens. So we experienced just a complete stop in the market. We just stopped, which is fine. But it does mean that you could probably count this as a day 10 high of our 60-day cycle. Last time here, we got day 9 as the top. So normal. What that does mean, though, is that you probably can expect not much craziness Now, obviously, the market can do whatever the fuck it wants, but you would just sort of expect nothing too crazy to happen for the next 2 weeks now, because we need to get to that day 30 low before we can charge up to our day 45 high, which would be scheduled for the 10th of November. So if we're going to break out and make some crazy high from 130,000 to 150,000, that would be where we're looking at. So we could literally be 4 weeks away from the top. We just have to play it week by week at this stage. But given that we've sort of stalled out here, the next couple of weeks are probably not going to be anything too crazy. If we do randomly jump out, then beautiful. But this tells me that most likely, don't be afraid of any sort of crazy moves happening in the next couple of weeks, or the next week at least. 3-day chart has come down. I went through this chart for Bitcoin, checking every time the 3-day chart went down. And every single time it went down, I literally could not find one instance. So maybe it's there somewhere in all of this price history. But overwhelmingly, as soon as we got one 3-day down, even if it's like a spike like this that came up and closed quite high, it continued down for at least another 3 days. But generally, it sort of found a bit of a bottom. So that's what I'm looking at and expecting. But if we're still allocated, we're still good. You really can't call the bull market over or even in danger until we lose a big bottom on the 3-day chart, and that's all the way down here at $108,000, $109,000. So there is quite a bit of clearance. So if you were sitting here going, oh, is now a time to buy some more, your stop's all the way down here. So you might as well just wait for a new all-time high, basically, because the risk is like 4 times that of, confirmation. So in terms of everything from a broad perspective, we're looking very positive. New all-time highs last week. Lovely, lovely, lovely. It appears that we've had our first high for the 60-day cycle. So now we're looking for our first sort of low around day 20. And yeah, bull market, good chance that we'll just finish up at the, around essentially by day 45 to November. A few weeks back, Steve was saying he thinks that around the rate cut the following month, and I'm interested, Steve, if you've changed that. But around like the next rate cut meeting for December, which is about the 9th or 10th, maybe something special will happen around there for us. But at this stage, I'm just sitting here chilling, waiting for the next couple of weeks, expecting sideways or a low. Maybe we come down to 117, maybe we come down to 119, but it's all pretty relaxed. You can see Fear and Greed was up at 74, and now it's like dicking around at 60. Like everything's sort of chilling out all of a sudden. So that's good. That's sustainable. A lot of charts, this is similar to Bitcoin, where the 3-day chart has come down. So once again, would not be surprised if Ethereum over the next couple of weeks also bleeds down. The logical spot is somewhere around 400 to 4,200. It depends on how long it takes to form that low. But it's still looking fine. ETH Bitcoin, once again, fine. We've made a low. We've come up. So we could keep coming down here. If Ethereum goes down to $4,000, it will end up at about here anyways, sort of tagging this 20 SMA. So all's chill, all's fine, still looking good. Solana, beautiful, 253. That was the exact target for the breakout here, this little cup and handle thing. It literally hit it. Beautiful. It's come back down. Big support here. You can see how it's just been bouncing around in this sort of cone between these two main lines. Beautiful. We're up here and we're in the middle, which means there's really nothing to do at this point, because we're 3-day charts turned down, and we're not above all-time highs, and we're not below sort of this major low here. So there's no point really, if you're someone who's like, people have been talking, so I'll just jump ahead. People have been talking about ETFs and potentially ETF approvals that will like transform the market, and Solana's just going to fucking zoom to $300 plus, or 290 to 345, that sort of region. If that's going to happen, then just get in when we clear this zone. There's no point getting in right in the middle, because equally, we say that we believe ETFs are going to come in and shoot the market up, but the government shutdown might delay things, and then all of a sudden we're all the way back down here. So you got to be wary about getting chopped out. So nothing here is, even with Bitcoin really, it's not nice and graceful. It's still very choppy. So you want to just look for the key levels where here's a key low and here's key top. If we're above it, I can be long. If we're below it, do nothing. But if we're below the low, then I can be short. So da-da-da-da. But basically, it's still looking good. We bounced where we've been bouncing for this entire fucking market, or this entire year, really. Lovely. All's looking good there. Here's a little thing. Useless. This is just something I saw today. We can see how we've had, because typically you get 3 drives down on things when they're having like a big swap to a bearish trend. We've had our 3 drives down. Sometimes you can get a 4th, but as you can see, that is not what's happened here. We've cleared this high here, and now up we go. So that's beautiful. On the balance of probabilities, useless is going to continue going up. So the question is, if Bitcoin and Solana and Ethereum are just going to do nothing for the next few weeks, you might not get this crazy follow through right now. You might just come back down and then blast off into the universe like Team Rocket. So once again, if you're unsure about what the fuck's going on, just look for the key level. If we're making all-time highs here, if it is the all-time high, let's go back.
44 cents is all-time high.
Yeah, cool. So if you're making all-time highs, then beautiful. Price discovery, we go. As you know, we're looking for sort of 10th of November being a Bitcoin top. Altcoins generally run longer, but we have seen many, many, many times when Bitcoin tops the very same day, Ethereum and Solana are both topping. So, you know, you might find that even meme coins also kind of follow suit and are not a month later, but just a couple of days later. Bitcoin dominance grinding up, but still dicking around 59. So we'll see. This makes sense given that Bitcoin has made a new all-time high and is now doing absolutely nothing. So we might just continue to see a bit of this. But as you can see, uptrend, but in an overall breakdown. So we expect Bitcoin dominance to continue dropping as the market continues. Typical alt seasons, or rather the market tops, have been all the way down when Bitcoin's dicking around at 40. So there's a long way to go for Bitcoin. I don't think it'll get that far because I was looking through the top 100, and maybe we can share it in a little bit, but the top 100, have a look and count for yourself how many cryptos are actually in the top 100 that are not stable coins or wrapped versions of Bitcoin and Ethereum. Because I'm finding most of the shit in the top 100 by market cap are literally just like wrapped Bitcoin or wrapped Ethereum. And there's like 6, 7, 8, 9 different versions of wrapped Ethereum, and similar for Bitcoin. And then you've got stable coins. And so in the top 100, there's really not 100 projects there. There's like 2 or 3, 4, 5. And that's why we've been keeping things very, very limited to Bitcoin, Solana. Ethereum had some fun, but now it's kind of chilling and matching Solana. So I'd rather be in Solana. BNB's good if if you swing that way, but I'm happy to leave them to the side. It's very, very, you got to be very discerning about what you're buying. This is just, I happen to have it here. S&P, look, new all-time highs. Gold as well, new all-time highs. This shit's just flying. So gold being a bit of like a hedge against uncertainty asset, that's really good. When gold does well, Bitcoin tends to do well. For other cycles, everything's popping. Q4, as John mentioned, start of the fiscal year for US is October, and they're just pumping. They're ready to make money, but we'll see how long the ride lasts for. So,
yep.
Thank you very much.
Yeah, and then like I said, guys, not trying to toot our own horn and say whatever, but we were telling you that basically after what we had that little pump in July, price action is going to be, it's going to be in Q4, and here we are. So one thing you said, you think Bitcoin's going to top on the 10th of November? You think that's where we're topped out?
Well, that would just be day 45. So around there would be a logical spot for either the final top or the final top for this 60-day cycle. Maybe we get one more. If we were to get, but then all of a sudden now we're pushing into January. So I'm like, we're running out of time for a Q4 top, basically. So you might get day 45 high, or in the next 60-day cycle, day 15 is the final top, which would align with sort of closer to 10th of December. But in either case, it's like, 4 to 8 weeks really away. It's like, this is the final countdown. I also saw an article in the paper today, like the whole full page spread about the Winklevoss twins releasing some more crypto investment things you can do in Australia. So the crypto articles are starting to kind of appear, which typically follows or the top typically follows. Like that's sort of the beginning of the end when you start seeing positive crypto articles.
Elias, you kind of were in the same vein that maybe we're going to be more earlier to the all-time high. Are you still predicting kind of late October? Because I know we were kind of considering that as an option. Now, what do you think?
Yeah, I can share my chart too.
Yeah, let's go.
Show it real quick.
For sure.
Okay, can you see it?
There you go. It's the first time people seeing you in sunlight, Elias.
Proves he's not a vampire.
Not today. Yeah, so basically if you look back, the screen area here is the 2015 to 2017 bull market. And I'm using basically two indicators to indicate or get an idea when the top is in, so the all-time high for the cycle, before we go actually into a bear market. This was from the all-time high, just a horizontal line, and down here a moving average. And if they cross, basically that's an indication that we should be on high alert. And I can check which EMA this is if you want to reproduce it. It's the 225 on the 1 week. So it's a bit aggressive to trigger early, so that we are alerted early. And the second one is those two lines here, those faint whitish lines. Once they cross, this the Pi cycle top indicator. It's also widely available on a lot of charting websites if you just Google it, if you want to look at it. And once this one crosses, this has been a really good predictor of the top is in within a few weeks of accuracy over the last cycles. And so this is the 2015 to 2017 bull market. If we go to the next bull market,
and let me explain for the audience real quick. So just so you guys know, the red area is the bear market time. The green area is the bull market time. So, and the word between you says low and halving. That's like the accumulation period. And then after the halving, that's the bull market.
Yep. Yeah. So basically the game for this, if the cycles will continue, a big if, basically you try to buy at the starting area and then you DCA out or sell nearer the top. And the second bull cycle, or the third for Bitcoin, 2018 to 2021, we had the same thing here, blue horizontal line from the all-time high, crosses the moving average, and we print a top basically here. The Pi cycle top hit or triggered a bit earlier because we had a double top, but it still worked. Once it's in, we go into a high alert mode, and that's it. But the most important thing for all the market cycles so far, and you'll see other combinations with other times of or amounts of days from other people and other charts, but at the end it's all the same. It's just a matter of how you or how you measure it. And for this measurement from low to high and high to low, it was around 1064 days for the bull cycle, and then about 364 days down for the bear cycle or for the bear phase. And then we had pretty much exactly the same with 1064 days again for the bull market phase, and then around 1 year or 378 days in this case for the downtrend. And this is basically how this is built, which was the prediction since, I don't know, 2 years or something like that for this bull market.
Yeah, we built that in 2022.
Yep. So far, it worked really good. The only thing is, what are the top indicators doing? So if we look at the first one, which is this horizontal blue line from the old all-time high, and the moving average here, it didn't quite hit yet. So the question is if we are just not aggressive enough or pumping aggressive enough that it will even hit at all, or if we'll have a top later, because if we go 1064 days again from the old low to the next potential high, we'd be at around October 20th. So in 1 to 2 weeks, which seems like a bit of a stretch if the price would also be correct, that we'd go from 120K to 173K within 1 to 2 weeks. But still possible, of course, if we get some ultra bullish news. And so the question is if this indicator will even hit at all. And the other one is the pi cycle top, with where this white line and the other white line down here would have to cross, which is not possible anymore. So I think
there's so much separation.
Yep. So either the cycles theory is over, which a lot of people are saying, that we'll just get a prolonged bull market this time, or the indicators don't work anymore, which is what I'd tend to. And so my strategy personally is, I suspect that will be a bit later this year, because there's a lot of legislation we're still waiting on. So I'll start to DCA out slowly from next week on, basically. And that's just it. And then I'll give it something like till the end of November to actually print the top, where I'll get really nervous to actually get out. And based on what I saw at the convention and the legislation that is coming out in the US, especially with just the sheer ETF buying volume we have, and companies like 21 Capital and other more or less newcomers, if compared to strategy. If you measure what they're buying up in the market, they're just buying up more Bitcoin than is available. And the OTC desks are running low on Bitcoin, actually. So there's less and less available for trading on exchanges, or for buying on exchanges even. And because of this, I think we could see something like not that of a high top this year. And then we see a small dump, but we don't really go down. Maybe we go to 120, maybe we go to 100K. And then we start going sideways and pumping again within the bear market. So that's a real possibility, in my opinion, based on everything we see. And we just get kind of a soft bear market, or even go sideways and then just keep pumping.
Crime season.
Yep.
Straight up crime season. Steve, what do you think about that? Is that something similar in TradFi going on right now, or?
Well, I mean, there's a lot of different takes that I could give on this.
Let's go.
My own take, though, if I was going to give an argument that like the bull run's going to top out in October and start bleeding out from November and December-ish, that would be because ADP jobs would come in poorly, which is scheduled to release, I believe, November 5th. Reason being, due to the shutdown, the regular government made like surveys and on this stuff are no longer being published because the people who work for that are, not currently at work. So we have to rely on private surveys now. And I think the Federal Reserve will probably wind up relying on these private surveys. So if ADP jobs shows a sharp fall off in jobs creation for the month of October, that might lead to a panic in the market. And that's how you would have a top in October.
But we wouldn't know until way after the fact, basically.
Yeah.
Yeah, okay.
That being said, like in terms of my own timing of this stuff, like if ADP jobs comes in, let's say net zero, the last report was, let me get out the information here. It was a 32,000 loss. So if October's result is beneath 32,000, negative 32,000 result, let's say negative 20 or negative 10,000, I would keep holding. If it's past 32,000, I would say anything past like, if it's like negative 60,000 or 70,000, that's when I'm going to start to be bearish and I'm going to start to be like, a little bit more worried. My own expectation based on all the econ data and all the data we have on like GDP, spending, earnings results, this kind of thing, leads me to think that there's probably going to be a relatively muted but still negative ADP jobs result. My own plan because of that is I think we're going to have some support due to rate cuts. I think we're going to be having support due to continuing strong earnings results from Wall Street. And I think crypto is probably set to follow TradFi. So if there is a bunch of strong results for Q3, which will be released from mid-October to early November, then I'm probably going to keep holding until early December, maybe start DCAing out late November. My own time frame is late November, early December for when I'm going to start going risk off.
Good. Super lit. Oh, fuck. I didn't notice this. Sorry.
Yeah, the screen's been black the whole time. I didn't know if it was my computer
bad.
or something.
Sorry. When I click remove, StreamYard needs help. StreamYard needs help. Every time I click remove, it just goes to black. It should go back here. Sorry. I was preparing some stuff, but yeah. So you're looking at December to get out, huh? Is anybody talking about
early December? But
is anybody in TradFi talking about extended bull market, super cycle, or is only the morons in crypto saying this shit?
Oh no, the average opinion on Wall Street is that 2026 is going to be bullish.
Really?
Yeah. I don't know if I agree or disagree with that. My current position on 2026 is no position. I have no position on 2026 right now. I can't give you analysis on 2026. I think the data is way too conflicted. According to market cycles, it's supposed to be bearish. And according to the fucking jobs creation, it's set to be bearish.
Yeah.
If you put a gun to my head and said, Steve, give me an answer, I would say to you bearish because there's been a slow but reliable creeping in negative jobs creation and jobs slowing down. So gun to head, I would say 2026 is bearish, but there's enough conflicting evidence for me to say I don't know. That being said, what I'm confident on is at least October and November. So I will still be risk on through those months, albeit if ADP jobs continues to get more and more negative, I will be completely sold off within November. Like if there's if the next ADP jobs result is like negative 70,000 for October, your boy is selling everything. Watch the ADP jobs result closely. If it says something like, there's probably about a net zero created or even a positive, let's say 1,000 or 2,000 jobs created, I might even hold to the end of December.
Yeah.
Right?
Yeah.
A lot of it comes down to these ADP jobs figures. Seriously. Just because history shows that in general, the Federal Reserve kind of plays this balancing act where they have to kind of balance on a tightrope, not go too far one way or too far the other way, right? And currently jobs have been slowing down. I'll give you guys the last 6 months as an example. So in April, plus 60,000 jobs.
Yeah,
May,
Steve, just go into your segment.
For sure. May was plus 29,000 jobs. June, interestingly, was negative 23,000. July was positive 104,000. That's probably because we had more tariff clarity and companies were probably thinking, all right, we can open our wallets on reinvestment a bit. The tariffs aren't that bad. For August's result was negative 3,000. And then September's result was negative 32,000. So it's clearly trending downwards, right? And what we've seen in history is that once jobs get negative enough to a certain extent, too many people get fired, too many people get laid off, they don't have the money to spend. Because they don't have the money to spend, the demand for goods goes down, which leads to more people getting fired and laid off, and that's how you get the recessionary cycle. Alternatively, though, of course, inflation can run too high, and even though you might be wanting for interest rate cuts, truth be told, interest rate hikes might actually be what helped the market in that situation. Because if you have some crazy ass inflation figure like 7%, 8% year over year inflation, you need to hike rates, right? So that being said, jobs are clearly going to the negative, which leads towards rate cuts. The inflation results haven't been the best, but they've been manageable. Between March to August, it's hovered between 2.3 to 2.7%. for personal consumption expenditures, and then for core PCE, which includes, I think, also food and energy, it was between the first one, where it's 2.3 to 2.7%, involves food and energy. Core PCE, which excludes food and energy, which is where we've been seeing deflation, actually, particularly with energy, has been between 2.7% and 2.9%. So is that ideal? No. But is it an unforgivable level of inflation? No. The most recent Fed Reserve minutes, which we'll watch a video on that a bit, have shown that the Federal Reserve's expecting 2 more rate cuts for 2025, so we can rely on that. One interesting piece of information, though I think this cycle might be broken this time around, is that every time the Federal Reserve has cut interest rates near an all-time high in the S&P 500, no matter what, 1 year later, the S&P 500 was always higher. Every time they've cut rates towards an all-time high, which is the current situation, S&P 500 was always higher the following year. That is the historical precedent. So I could see an argument for 2026 from that. It's just this fall off in jobs is actually crazy.
Well, let's look at that clip real quick, and we'll kind of talk about, because I want to get your take on the Federal Reserve, because they have a Federal Reserve meeting this month. I believe it's on the 29th, right?
Yes.
Okay, let's see what they have to say here at the Federal Reserve.
Rate cut decision to the 29th.
Let's go.
Brian, thanks very much. After cutting interest rates by a quarter point for the...
1 second.
Brian, thanks very much. After cutting interest rates by a quarter point for the first time in months, most Fed officials agreed it was appropriate to ease further beyond that cut that they gave. Some were a little bit more cautious, and we'll talk about that in a second with a big debate there.
Steve, at any point you want me to pause it, just tell me.
And those who were cautious, citing financial conditions which were pretty robust and upside inflation risk remaining elevated. The Fed cut amid what the minutes called a shifting balance of risks at the time. Downside risk to employment had increased. Inflation risk had either diminished somewhat or had not increased. A few argued they could be either unchanged on rates or they could cut. They could go either way, essentially. They were concerned about the stalled inflation progress and inflation expectations. There was a range of views and apparently an interesting debate on just how restrictive the Federal Reserve was at the time, or is even now, and that's reflected, I think, in the markets. Participants stress the need.
Yeah, so there's an interesting discussion about trying to find the quote-unquote neutral rate. Now, the neutral rate's something that's actually subjective. It's debatable. But the idea is that if you lower rates past under the neutral rate, you're formally stimulating the economy. And if you raise rates above the neutral rate, you're actually constricting the economy. And Federal Reserve officials will openly admit that they should go beneath or above the neutral rate if inflation's too high or if jobs are falling off a cliff. And they'll openly admit to saying, no, we need to be restrictive. We need to be stimulative. This is where we get the idea on cutting rates because of jobs, because since jobs have been reliably weakening month after month after month, nearly without exception, spare July, this is why I lean towards them cutting rates. Not only that, but yes, inflation is above 3%, but we're not seeing the inflation that we saw in 2022 or 2023. So I don't think the Fed's going to be that seriously inclined towards wanting to ever hold rates or hike rates, at least within 2025. Because you have to remember, ego is a certain thing that's playing here. And at the end of the day, Jerome Powell doesn't want to be remembered as the Fed chair that caused a massive recession. There's also, of course, political pressure from the Trump administration, which is towards cutting rates. So that's why I think they're going to cut rates. One thing you will see them do is they do this skit and dance where even though it seems pretty obvious they're going to move one way or another, they'll pretend like they're too worried about inflation, because what they don't want to have happen is them say, we might cut rates, and then markets price in that they're cutting rates, and then they choose not to cut rates last minute, causing a crash in the market. They don't want to create that market instability, right? So what they do is they do this like kind of kabuki theater of, oh, we could cut rates, we might not cut rates. Nobody fucking knows, even though really they're going to be cutting rates. With this fall off in jobs, they have to cut rates, really. And again, as I mentioned earlier with the inflation report that measures energy, if you look at the one that measures energy's impact on inflation, it's reliably lower. Why? Because as we've been mentioning on the show, oil prices have been remaining low, and I think they're going to continue to remain low, if not get even lower. I believe, if I was not mistaken with what I saw on the news, they just came to a peace agreement over Hamas and Israel, right? So that's going to deprice, the oil's going to start to go down a little bit on that because it's going to deprice the Middle East conflict risk. Oil rises and falls on conflict, by the way, or one of the things that affects it. So that peace deal being signed is actually good for rate cuts because that means likely less inflation from the energy side of things.
We'll see, because Netanyahu always is a fucking psychopath, and he just, Netanyahu, he's a fucking psycho.
He'll probably strike Morocco next.
Yeah, this isn't some like Jew hate shit, but he's a real piece of shit. I don't like the guy. I don't care if he was fucking Muslim, Christian. I'd hate him no matter what his religion was. But you want to continue with this, Steve? Or you think you got what you needed?
Yeah, sure. We can continue on the video.
Okay.
For a balanced approach in addressing the employment and inflation sides of the mandate, arguing that they would address that side of the mandate that was further from their goal. Stephen Myron, as you know, dissented. He noted, as he has publicly since then, saying that the neutral rate has fallen. He thought the Fed was more restrictive because of that. Quick detail on the inflation date. You had those saying, look, productivity is going to keep inflation down. You have lower net migration. That will put downward pressure on inflation. And employment was not a source of inflation. On the other hand, those who were more concerned about inflation talked about tariffs. They talked about inflation expectations remaining elevated, and businesses saying that they would raise prices to pass along some of those tariff increases. Most thought the tariff effects would be realized, get this, by the end of next year. Not this year, but the end of next year. And there was a line there, Ron, I thought was interesting.
So far, what we've seen in tariffs is that probably the majority of businesses have passed on the costs they're already going to pass on, an estimated 63% of them. The remaining, 47% or so, they still have some costs to pass on, but they've already begun to hike prices as well. If you ask me, tariffs have already been mostly embedded into the economy. They've already mostly embedded the price hikes they're going to have. There's uncertainty because Trump might change them in the future, but you have to really remember here, and what's important to drive home on tariffs is that at the end of the day, it's a one-time price increase. When we're considering inflation, we're considering something that is the volatility of money, or the velocity of money versus the amount of goods and services being produced. That's a bit of a different equation from just having a one-time hike higher that's going to remain no matter what. That's the result of a political decision. It's not really inflation in the form of, oh, we printed too much money, now we need to chill on that, or there's a supply chain constraint somewhere, thus more inflation is going to come into the picture. No, tariffs it's like raising the sales tax, right? So it's kind of awkward to consider tariffs in the long run for their inflation projections. Personally, I think tariffs are overhyped. The other thing that you also have to remember on tariffs that I'd say 95% of people that I talk to get wrong is that, one, the producer of the good, let's say it's a Chinese and an American company working together, the Chinese producer will actually eat some of the costs of that tariff on their bottom line to not hike the price down the line to protect sales volume. Right. And the seller, let's say it's another American company that isn't responsible for selling said Chinese made good to Americans, they're also choosing to eat some of the tariffs on their bottom line as well, rather than giving all the pricing increases to the consumer. So there's already 2 points where the tariff bill goes down a bit before the consumer even sees anything.
Good stuff, man. Let's wrap it up here, and we're gonna go. We got plenty more show, guys. So listen, guys, I'm telling you right now, if you're not paying attention, you have monies in the market, you need to be paying attention to us every single week because we're in high alert mode right now.
They are watching artificial intelligence, talking about the huge impact it's having on GDP and investment, and also noting the adoption has the potential to reduce employment. Brian?
So all in all, Steve, is it fair to say that the bias was You said there were some people who are having trouble making a decision whether they want to lower rates or kind of keep them the same. Is that kind of a tell or a read, some sort of tea leaf to what we can expect at future meetings?
If I could answer that, Brian, I would say, normally I would say it depends on the data, but we don't have the data. So we have to go back to where they were back then and think about the data they may be seeing. I think the important phrase here is the one that I led with, that most thought at the time when they did it, it was appropriate to ease further. I think the debate is not does the Fed ease or not, Brian. I think they will. It's how much from here. And that's why I stress this issue of this debate over how restrictive the Federal Reserve is. Some think the Fed is very restrictive. Stephen Meyer is taking out his point that the neutral rate is much lower. And if the neutral rate is lower, then the Fed being up here is more restrictive than thought. Others look at the financial conditions, the booming stock market, relatively stable interest rates, and say, you know what? There's not a whole lot out there in the markets or even in the economy that's screaming. So there's a debate, but I would say the bias is towards rate cuts. The unknown is how much.
Okay. Steve, what do you say? We're going to go back to 25, another 25 basis points?
I'm expecting 25 basis points for the upcoming decision.
Yeah, I think so too.
I don't think it's 50.
Yeah. One thing that I was curious about towards the end of the video is he said others are looking at other indicators such as, you know, GDP and the market doing super well. Do we really need to cut rates? Well, it's an interesting discussion to have because the thing is, consumer spending is doing great. GDP is doing fucking great. They've had to revise Q2's GDP figures twice. First, they released it at 3% when they first released the figure. Then 2 weeks later, they raised it to 3.3% growth. Now, 2 weeks ago, they revised it even higher to 3.8% growth, and they're projecting between 3.5% to 4% growth for Q3's result. It is yet to be released. Reason being, consumer spending is doing a lot better than what most analysts expected or originally calculated, right? But why is the consumer doing well? Well, the consumer is doing well not because Americans are on the beach or whatever. It's really because like the top, give or take 30% of Americans are doing all this spending. And because there's a great, like, you know, rise in, you know, the wealthiest people own their own income because of their heightened portfolios, because of their, you know, increasingly like drastic wealth inequality in the US, that they're able to spend this money. So it's really the economy is being held up by the wealthiest and kind of the upper middle class of Americans right now, right? But the jobs are still falling off. So traditionally speaking, the Federal Reserve is only supposed to look at two things: inflation and jobs creation. But now they're resorting to looking at these other figures because really, truth be told, jobs for the average Joe are drying up, but GDP is still being held up. So you tell me, is the economy doing poorly or is it doing well? To me, it looks like a K-shaped recovery. The top does well, businesses do well, but the average consumer, the average guy gets burned by the process.
Steve, it's kind of like what's happening because I don't know if you guys know, Steve and I both used to live in Japan. That's where we met each other. And that's kind of like what's happening in Japan right now. Like, if you talk about fucking cooked, like even, and it's funny because they just had like a super right-wing new prime minister put into office. So right-wing, she actually wrote a blog post agreeing with Hitler on some shit. You know, she got some backlash for that. But it was like, because Hitler said if you can't convince them to join you, just kill them, and she supported that. So it's pretty based, but the Japanese are like having their own like MAGA revolution right now, and they want everybody out. But the thing is, there's so many people that are like, Japanese people are just overworked slaves, man. It's fucking so sad. They're conditioned to be obedient. And I mean, you, Alex, you hung out with us in Japan. Me, Steve, and Alex all hung out in Japan a couple years ago. And yeah, their markets recently took off too. Their 30-year bond, or I think it was the 30-year Treasury bond, Steve. But the Japanese
government bond.
Yeah. That took off, and then the Nikkei went up like fucking a crazy amount. So it just kind of showing that like the GDP on paper is going up, and then as like Alex and I were talking about last week with like OpenAI investing in Intel, investing in OpenAI and Oracle, and just massive crime season. So look, guys, This is why we tell you, if you're a man and you're not understanding assets, you're not understanding investments, and you have to learn this stuff, because the way the financial system's heading, because even we got the whole panel here in Germany, I think they just said they raised the working age now to 73 to keep the Ponzi government going, or I think that's on the docket. I saw that earlier this week.
Yeah, they're talking about that since like decades, because they know it's coming. It's basically the same as in Japan. The DAX, which is the local indicator for the stock market listed companies, for the big ones, is going up. People are getting fired by the tens of thousands, like Bosch and all the car makers are firing people left and right. And it's really getting hard. Cost of living is going up. Asset prices are going up because of inflation, partly because of just increased costs. And we are looking at least for Germany, for most other European countries, it's the same or worse, with the sole exception of France and one or two of the Scandinavian countries. But basically, we're at like 40% elderly people or more. So it's the same as Japan, just not as bad yet, but it's getting there too. It's just a numbers game. And
another 5 million migrants will save it.
Yeah, that's on top.
They just changed the definition of elderly and added another 8 years. And they're like, what do you mean? We just invented a bunch of working age people.
Even from an economic perspective, they are less damaging than a lot of old people that didn't get enough kids.
Yeah.
So
that's true.
That's just the current state, and it's also why I'd be cautious of 2026. First is all the magazines and the, I'd say, retail and small investor financial news websites are pushing the 2026 as a bull year narrative, at least the stuff that I'm seeing and reading.
In Germany?
Worldwide, in my opinion. But in Germany as well, yeah. That's at least what I'm seeing. I don't know if I'm in some media bubble or not, but that's one thing. And the other thing is that just with all the quantitative easing we're seeing, just because an asset price goes up in US dollars doesn't mean the asset is actually more valuable because of it. Yeah. If we see a hike in inflation, and that's what we've seen on the 1st of October with the pump, like the first percent of this pump was visible in Bitcoin to US dollar, but not visible in Bitcoin to a lot of other fiat currencies. So what actually happened is the US dollar went down in value compared to other fiat currencies and Bitcoin. So that's why the candle looked so big and green for Bitcoin. And of course, it pumped. It actually pumped now too, but that's one big aspect. And the last one is also, but maybe I'll jump into that later with the stable coins and the treasuries.
Just go ahead, go into your segment now. Go, just shoot your shot now. Go for it.
Okay, so basically one big thing at the token 2049 was treasuries in combination with stable coins. So what they're doing basically is, and US government, at least the current one, is supporting this, is they want people worldwide to use US dollar-based stable coins because they're digital, they're easy to use, and US dollar is in most cases much better than the local currency that is just inflating away. And maybe Steve can say something to that, but as far as I know, currently the Fed is one of the only big entities buying US treasuries. So what they want to do with the stable coins is that the stable coins, at least those that are licensed in the US, are based on US treasuries. So they have a more buying of US treasuries, basically, which is good for stability and good for the US government. So they can raise more money this way. And the US dollar keeps its global dominance in the digital digital space, basically. And for this, there's a lot of companies that have been talking at the crypto conference just about stablecoins. And there's also Tether, so the guys doing USDT, with the Bitfinex exchange behind it, and a lot of crypto companies behind it. And they are launching US-based stablecoins, so basically USDT, but with the compliance stuff and license to run in the US, fully backed by US Treasury. And this was one big part of the new narrative being pushed. The other big parts have been DeFi in combination with Bitcoin. So they're seeing what MicroStrategy is doing, what other treasury companies are doing that are basing their stuff on Bitcoin. And what they're doing is basically they say, okay, you can borrow against your Bitcoin on this DeFi protocol, or you get yield for Bitcoin on this DeFi protocol. So they are merging a lot of the projects are merging the DeFi stuff that doesn't have any actual cash flow in a lot of cases, apart from people trading within the small chain. They're merging it with Bitcoin or with real world assets and TradFi. So the big companies like Coinbase with Base are pushing to get actual stock trading and legally licensed stock trading on-chain into their app. And they are also pushing into monetized social media, especially with Coinbase. So they are launching their own social media app, which has payments and everything directly inside on their Base blockchain. And this is like the mix of project I've been seeing at the conference, more or less. But the really big narrative and push are stablecoins, Bitcoin-based DeFi, and social media.
Crazy stuff, man. What a time to be alive. What a time to be alive. Thank you so much. And that, guys, that's why it's important to go to these. If you have the opportunity, you should go. I went to Bitcoin 2025 this year. That's where this was in earlier before the summer, like right around summertime, excuse me. And that's when BlackRock, I sat there and I watched the BlackRock presentation, and they were just like, we have no plans to be slowing down our ETF. And if you've been watching the BlackRock ETF, I'm going to jump right into it. BlackRock this week alone, okay, on Monday, BlackRock alone did $970 million. Just BlackRock. I believe it was the second or third highest inflow day in the history of ETFs. The first, I think the highest one was when Trump won last year in November. I'll go real quick and pop around and show you guys what we got popping around here. And let's take a look. So this is what we look like here. So if you look at this, this is just, we just go to the 1 month, okay? Compared to what we were doing earlier, this is about a month ago. So we were doing days of like 300 million, 160, 700, 500, no big deal. But then this was last week. So last week we started off at 500 million, and then there's another. So that's $1 billion right there. And then we got another 2 days. That's 1.3 billion there. And so that's 2.3 billion. And then plus this. So that's 3.2 billion last week. And then we break it off and we start off the next Monday this week, 1.21 billion. And then yesterday, BlackRock did another 900 million. And then I forget the numbers because they're not here right in front of me. But as you can see, these are picking up. If we just take a look at all of them, okay, we had a decent little pop around here. This is like around around Crypto Week, when we had all the legislation passing, the Genius Act. And remember, the Clarity Act is still up in the air that they're hoping to get packed. And then this was last year. So if you can take a look here real quickly, pay attention with me at home, you can see this is the ETFs. Now, right around here, you can see they started off a little bit on October 7th. then that was 200 million. And then it kind of got little bit, right? We are already doing way more than that in our current October right now. And that led to like catastrophically large numbers towards the end of the month. And then that led us to this biggest, I think this was the biggest day, 1.37 billion. I think we will do more than that this year. We're going to see what catalyst hits us. If we come over to here to Ethereum, we had the biggest ones here around right after crypto week. As you can see, we had $1 billion in on the 11th. And we did have some little, not as much activity on Ethereum, but I still think they're primarily focusing on Bitcoin. Bitcoin is still the narrative. But when in doubt, just believe in corruption. And I just don't think BlackRock did this to make a couple of billion. I think they're not in that kind of game. They're in the big money game. And I think that's what we're going to be doing with the ETF. So keeping an eye on this. This is one of my newest favorite indicators that they have for us in crypto, because it just really lets you know what's happening transparently with these big industries. Going into here, I'm going to talk about this real quick. This is what's happening this week. So as you can see, this is on the 7-day. A lot of things are up. We have Double Zero up 70% on 7 days. We have Pancake Swap, and I'm going to cover why Pancake Swap is going up at 51% on 7 days. We have Mantle, Zcash, SPX 6900, another meme coin in the top, and then BNB, and then Floki, which is the official meme coin of Binance. Now, you might be asking, why is this happening? What's going on? Well, if you just look at coinmarket.com here, BNB has been creeping up, and BNB coin is now the third most largest cryptocurrency in the world. I believe this is the first time they have taken the throne. I may be wrong, but I do believe this is the first time they've taken number 3. They call this Chinese Ethereum, and Binance is the largest, platform in the world for cryptocurrency. And as you can see, they're almost at 200 billion market cap. And with Ethereum dragging its feet in the ass this entire bull market, I just bet. I mean, Steve can tell you, I bet on Chinese corruption. Okay, I always bet on Chinese corruption, and
big difference.
Yeah,
the big difference between those two is that while Ethereum Foundation is selling to keep going, Binance is buying and burning, and they actually have something they can call cash flow or income.
Right.
So,
right. Yeah, definitely. And that was a big surprise. So why I'm talking about this is because, look, in my personal opinion, the price of BNB is controlled, and the price of XRP is controlled, the price of Solana is controlled, and these three are typically always fighting for the top 5 spot. And that leads me to my next point here. Real quick, if you look at this is the first time ever BNB has taken the number 2 spot in dominance.
Okay.
Right? It's usually Bitcoin, Ethereum, and then Solana. But what's interesting here is, with BNB number 2, Solana right there at number 3, Ethereum has taken a backseat at number 4. But if you look at the narrative data shows that DeFi is making a comeback, and that is directly connected to what Elias says about what's going on at Singapore at Token 2049. So clearly they're talking about DeFi, getting your Bitcoin money, lend it out, and being able to take a loan out on that. And they're doing a lot of this on DeFi protocols. So there's that.
Okay.
Go ahead. What were you going to say, buddy?
I just wanted to say there was AI as the biggest one. Then there was DeFi, stablecoins, and RWA, which stands for real world assets. So something like a condo you're renting out, and you have this condo as an NFT and have profit sharing within DeFi with this would be an example. And I think the AI stuff will shrink because people are using stuff like ChatGPT and the others in production at their job already. It doesn't need anything crypto. It doesn't need any decentralization. If you want it decentralized, you run it on your own GPU on your PC. If you have a laptop or something smaller, you just use ChatGPT. That's the reality.
Yep.
And so I think the AI stuff in crypto will shrink away, and then we'll have DeFi as the big thing. Then we'll have stable coins because the governments are getting in on it, and people like PayPal some execs of PayPal will have also been speaking at the conference, getting into stable coins for international payments because it's just cheaper, faster, and easier, because they can do everything within themselves without with much less bank support and connecting different systems. And the RVA stuff is also going to get bigger, but in my opinion, it's not really needed. So it's going to go away. So in my opinion, it's DeFi and stablecoin stuff.
Yeah. Going back to some of the news I wanted to talk to you guys about. So real quick, this is like, Solana posted many men talking about, many men wish death upon me. And then BNB is talking shit to it saying window shopper. So they are having a fierce competition between them. And you might be asking yourself, why? Why is that happening? What is going on? Why are they fighting with each other? Well, there's a rumor. There's a rumor going on right now that this Friday, despite the government being closed, that the Solana ETFs will be approved. And Fidelity, as Steven can tell you, is a pretty big asset manager in the world. And Fidelity, they're massive, right? How much do they have? How much do they have under management? They're number 2, right? BlackRock's number 1 and Fidelity's number 2.
I think Vanguard's number 2.
Oh, okay. Didn't their CEO step down because he didn't want to do the ETFs?
I'd have to check that.
I'm pretty sure he stepped down this year. Let me see. Vanguard's CEO steps down.
6.4 trillion under assets with Fidelity. So I think that puts them reliably at number 3, because I think BlackRock's is like 12 and Vanguard's is around like 10.
Yeah. And no, that was right. So the Vanguard CEO did have to step down last year because he fumbled the ball on the fucking ETFs. He told them don't do the Bitcoin ETFs. What a dumbass. So going back to, let me just say that. Did you guys hear the sound? Did the sound come through on that one?
Yes, quietly.
Yeah.
Far away.
Okay. Oh, far. Okay. I think I know what I have to do.
Ghost of a fart.
I think I know what I have to do. Okay.
Also, one small caveat on Solana and Binance. Binance has a lot of the Solana.
Yeah.
And they're I'm sure Binance is checking the SOL/BNB chart, and they have enough Solana to make sure it's BNB is at least. Solana is allowed to pump if BNB also pumped beforehand.
Pumps, okay.
Basically. And because they are, Binance is one of the biggest validators of Solana. So they are actually running part of the Solana blockchain. So they are earning, if Solana gets bigger, Binance is earning more money. And they can also control a lot of the price because they get a lot of the rewards for running the validator nodes. That's just a small side note. So I wouldn't expect higher profits in Solana than the profits that have been made in BNB.
Okay, that's really good. Yeah, because Invest Answers was mentioning that there was a thing about Binance says, we don't stock any Solana as like a treasury or anything. We don't have any Solana. We've got no Solana here. But then they're sending 10,000 Solana at a time to Wintermute.
The Wintermute, exactly. So no, again, don't trust those Chinese fucking scammers. But the news that we're looking for, if you guys are Solana bulls at home, take a look at this here. Okay, analysts say Solana could rally from $290 to $345 if the SEC approves the spot ETF this week. And if you look here, the deadline is this Friday, and that is Grayscale, VanEck, 21 shares, Canary, Bitwise, Franklin, Fidelity, CoinShares, and Invesco. So Grayscale, Fidelity, and VanEck, those are big, heavy hitters. Bitwise has been doing well as they've been, had their little ETF with Bitcoin as well. But that is this Friday. So if that happens, people have been thinking that's why Solana's kind of, people are gearing up, and the Solana treasuries also have been, just fucking. We've just been waiting. They've been massively accumulating. So there's that, and then here's the thing I want to end with. This is the big. I don't know. I'll just show you guys. This is the fucking red flag here. Take a listen to this shit.
correct me if I'm wrong, but I think going into late 26, your forecast for Bitcoin and Ether are pretty good, yes?
Not mine, but our team's. So we're looking for continued follow through there. It kind of comes back to your discussion earlier on how to think about your alts in terms of gold and crypto. And I think your commentary is spot on there. I mean, I think we just have to allow that. You have a very aggressive momentum-driven equity market, and so I think people don't want to miss that. So you're looking for your hedging opportunity. And the way we see it, in addition to central bank buying, as you mentioned, I think that those two asset classes become hedges of choice as you're trying to navigate this ongoing strength, highly valued, but momentum-driven equity market.
Correct me if I'm wrong.
So they think the bull market's going to continue through 2026. Yeah.
No, that's not what he said. He said, you bullish for next year? He said, no. See, that's not my opinion. It's my team's opinion. That next. Look, guys, I told you. Fuck. I got a few things that I really want to. Elias, Coinbase. Did you say that they're doing a social media aspect to their app? Is it going to be like Kakao Talk kind of thing that we've already got, where you can do payments and everything from it, or is it someone else?
It's basically like a mix of Twitter and Instagram and YouTube and maybe WeChat, and everything you post on there, everything you do on there is like an NFT that is tradable or a token. So if you, this is what they had in their presentation, and they're in the alpha or beta testing phase. So a lot of users are actually using it already. And as MLD probably knows, all the social media pages are really nice and paying you a lot of money for your hard work right now, especially places like YouTube with monetization.
Yeah.
That's
sarcasm.
Yeah.
And
I noticed the other day YouTube Shorts, it's like every third video is an ad. It's like you can't.
And they pay you basically nothing compared to what Coinbase is trying. They are basically seeing, this is what they said in the presentation, of course. Could be worse if you use it live. But what they're doing is they say, okay, monetization on social media is bad. We have money, we have users, we can create real interactions without as much of the problems as we see on X, for example, where the problem is that you can post for free. So you get flooded with bots and with AI slop. But what they're doing is your post is now a token or an NFT. And if your post gets a lot of likes, you can trade it. And you can directly monetize it. So a like is also a monetary transaction. And everything becomes tradable on a monetary transaction. And they're all doing this on their own base chain. So what is happening right now is that a lot of people that are in the alpha or beta testing phase came over from places like Twitter or from the video area of Instagram and TikTok. And they compared the monetization results, despite the app from Coinbase having much lower user numbers than the big social media, the established social media pages. The creators made more money on the Coinbase app, which isn't the Coinbase wallet, but a new app. I think it's called Base or something. And this is just the idea. So they're trying to suck in a lot of good content creators with the better than average monetization system they have. And they also get the crypto crowd that wants to trade their posts and play around with it. And they are trying to just grow this way and bootstrap the whole thing. Yeah, I think this might be really interesting.
Yeah, something about it just kind of doesn't seem to. Like, I know that like the issue for putting out something that is very popular is sort of like doing the market testing for it. And you strike gold and then you want to double down on that. Whereas other people can just see what's good and then just copy it immediately. And if they can copy it faster than you, then you might put something out, and as it starts going viral, just everyone just copies that because now this is the thing making money today.
Yep.
So that'll be an interesting challenge for them to kind of do. But well someone's trying something different because
you pay to post.
Well, the thing that I think,
and that might be enough.
Well, just wrapping everything up here, I think that what we got here is it's pretty rare that we have back-to-back bullishness. It's been a while, but since I think it was like August, basically July and August. So just stay frosty out there, guys, because we're paying attention every day. We're keeping our eyes here peeled, and with all the stuff that's going on. Just be careful, because like I said, statistically speaking, we're now in the second most profitable month of crypto. And then November is the big finale. I don't personally think there's going to be I don't know why people say it's going to be bullish quarter one. I'm traumatized from last year. I don't believe it. So go ahead and take it.
Well, this is just something, just because, as I was saying before, like we've had a 3-day chart turn down. So generally it'll dick around for at least 3 more days, but we might go to the middle. And then Bob's coming in. He's been very, very bullish for a while, so he's gone a couple more days and go. So perhaps from his view, we should just kind of rock it up. So we'll only get a couple of days to the side. If we do 60-day cycle normal stuff, it should just dick around for a couple of weeks. So let's see, but it should really be far more positive than bearish, especially if we're in sort of a blow-off phase. Quick little thing when it came to like OpenAI and all the fucking like sort of fake money creation and scamming for AMD, as some of the guys in the chat were posting about. OpenAI picking up 10% of AMD's stock, and they want to do 6 gigawatts of computing power in the next couple of years. I sit there and go, like, 6 gigawatts is a fuck ton. So it's like an entire city is 1 gigawatt. So they're talking like several cities worth of electricity. And people start to throw money in, and like the stock jumped 10%, and everyone gets very, very excited. But that's not something that can be achieved quickly at all. That is like ridiculous, the scale that they're promising and all these things. We spoke a few weeks ago about Oracle and how they're given millions and millions of GPUs that don't even exist currently, and the company doesn't even have the means to actually create them. They're just like, oh, it'll be fine. So we can see a bit of the insanity creeping in. Who's to say if they can pull it off? But it is, they make it sound like, oh yeah, cool, this deal's been signed on a piece of paper, so now shit'll just happen, when the actual infrastructure is quite large. So that's pretty crazy. And then every time I hear people talking about Q1, I get more excited, and I just, this is my opinion of that. That's good. I want to hear more. I want to see more crypto articles saying it's next year. I want to see more like all-time high forever. 2026 going to be amazing. Makes me feel good inside. Makes me more convicted that we are indeed going to top, either day 45 around November 10 or around December 10 on like day 15 of the next one. So, yes.
We'll sit tight. Basal Modad says AI bubble will pop due to insane energy needs. I don't. Oh, oops, sorry, Elias. You think so, Elias? I don't think so. You think so?
For sure. Like,
really?
I see it in mining. The energy prices, and especially in the US, are going crazy. You have I don't know how it's called in English right now, but you get us like, okay, you're using too much energy, dear industry. So from now on, we'll cut off your energy for 1 hour per day.
Kind of like restricting
people. Yeah. That people can run their AC or something in Texas, especially. And this is coming more and more. And actually, in Texas, if I remember it right, they have recently sold more energy than they actually produce in contracts. So what they are doing is, and they've done, I've seen this in Africa too, in Ethiopia, the government, I don't think this happened like planned in the US, but at least what they're doing in Ethiopia and Africa is they sell more than they actually produce. And then they just increase the energy price until those companies that have bought the energy that doesn't exist go bankrupt. So they got all the capex, so the pre-investment for the energy contracts, then they push them out of the market again. And that's happening all over the world. And you also see this in the US. And if you're talking gigawatt scale, you below 1 gigawatt, you have 1 megawatt. And just from mining, for example, it costs about depending on the machines you buy, $3 to $5 million to put down 1 megawatt worth of compute or of compute power. For AI stuff, it's even more expensive. It's like 5 to 20 million US dollars. So you're talking this times a few thousand times. And what they're actually doing right now is they are putting they don't build real data centers anymore. The big companies like NVIDIA are starting with this. They just put down a slab of concrete and then they put plastic foil over it and call it a data center because it's scaling faster, and it's not some cheap foil, but this is how much money they're pulling in and how fast they have to invest. And I think this is one of the biggest dangers for 2026, because all of this stuff has to be profitable or stock price goes down.
Yeah, and actually, you just reminded me. I looked at something today that connected to exactly what you said, Elias. Look at this. This was posted by a Zerohedge, and they said here, data centers are facing 800 billion revenue shortfall, not to mention 50 gigawatt energy shortfall. Can circle jerk money into an existence, but gigawatts is a little bit more difficult.
Yeah, exactly.
If the electricity price goes up by 0.5 cent per kilowatt hour, you'll see data center companies go bankrupt.
Yeah,
like the small ones.
Yeah,
and
then
if you go up even more, you'll see the real problems. This is why the big companies like Microsoft are trying to buy their own power stations and everything.
Yeah.
And
we were just talking about this because me and my brother, our electric bills are going up over here in Florida. And we were talking about this. Take a look at this real quick. I think it's, because it's on Signal. Okay, 1 second. Oh,
that's it. But hey, guys, we're going to be net zero, right? 2030, right?
Yeah, fucking hell, bro. Greta's going to be happy. Greta Thunberg is going to be super happy. I have a map here showing exactly what happened since 2020 in America with the electric prices. So you at home watching right now, you can see what's going on in your state. But right here, this is the map of the United States of America. And you can see this is price increases in your electric bill since 2020. So if you're living anywhere but Nevada, you've had a price increase that's been pretty massive. I think they have a lot of solar panels out here. I think that's something about that because they're just in the middle of the hot desert. I'm down in Florida, so we went up 36%, pretty crazy. New York's almost 44. Maine is 67%. California 63. They just seem to be doing everything wrong in California.
They are importing from Nevada.
Oh, I don't doubt it. Yeah, I don't doubt it. The electricity, right?
Yeah, they're importing coal and oil-based electricity, I think. And yep, that's why the price is going up in Nevada still.
Yeah, this is why I'm actually looking into putting some solar panels on my house and a battery. And I just plan to finance the whole thing and let fucking inflation make it worth nothing down the road. And I'll pay it off for like 0.001 Bitcoin. So you got to just understand the Ponzi, guys. You guys got to understand, if you're not buying assets, I bought some gold in Japan a couple years ago, and then I just sold. I had two little bars. I sold one to buy some guns, and gold is just continuing to rip. People are saying gold is going to go to 5,000 before Ethereum. And I kind of believe it because at this rate, Zerohedge is saying that it's going to be at about 5,000 in 2 weeks. So we got a lot to talk about, guys, and we're so glad that you came to watch us today. Hit that like button, and we'll be back. We'll be telling you guys more and more and more. And we're gonna ride this to the end. We're gonna ride this to the end. So stay tuned. We got about 3 months left before everything's totally cooked, and people are blaming Trump for everything. So until then, we'll catch you guys later. Peace out.